Well, hello folks, hello family, welcome to the show. In today's episode, we're going to delve into the world of mortgages to find out a little bit more about how you can turn your dreams into reality and own your dream house. With a case study looking at Crystal Rivers, folks, we're going to find out from the frequently asked questions that you've been asking about, how do you really purchase this unit? Do I qualify to put in 1 million shillings and pay 50,000 every month? That's what we're going to be looking at with this particular episode. My name is Peter Ngigi. Welcome to Property Focus. Now, to the most frequently asked question whenever we're purchasing units over here at Crystal Rivers, you've seen that 1 million deposit and 50,000 every month. How do you get it? Entering the 5 C's of mortgages, starting with the very first one. And now you've seen this particular project on the show. We've reviewed it many times. We've done the first show house for the apartment, the second show house for the apartment. We've done the townhouses. Now all of that is done. We only have the apartments left. So the very first C is collateral. Now, collateral is the security that the lender is going to hold on to or claim to in the event that you're not able to pay. So that is the asset that you'll be looking at. So that's collateral. The second C that you'll be examining is capacity. What the lender is going to be looking at this particular stage is your capacity to pay. They'll be looking at your employment history. They'll be looking at how long you've been working there. They'll be looking at your financial obligations, your income. Basically, they want to ensure that you have the capacity to make the payments for this investment that they're making with you. Brings us to our third C. Now, that is your cash flow, your income and expenditure. They want to weigh it out and make sure that you still have enough room based on your incomes and expenses for your account, that you still have a good amount to still make payments for this mortgage every other month. That's what they also want to determine. So they'll be looking at your past payments throughout the whole year. 12 months is usually a good period to just establish that so that they can give you this mortgage. The fourth point is the condition. The condition of the property, the better. So the newer the property, the faster accessible. Once the valuers come and look at the property, you're able to get this particular mortgage. Because of this, the bank wants to ensure that you don't have further financial obligations on the property, and to them that is an essential tool in just giving you the property. They could give you a mortgage with an older property, but they'll need to ensure that there's not too much financial obligation on this property. So brings us to our fifth point, which is the capital. You've often heard of 10% deposit, you've heard of 20% deposit. To each bank, to each their own. They've got their own requirements, and your own capacity to make this particular mortgage would also be determined with that capital investment. So those are the 5 C's that we're looking at for this project, Crystal Rivers. You've heard a lot about it. We've reviewed it over and over in time. You can see these beautiful images of this particular project. Something that's important to note, we're going to have a financial advisor over from Stanbic Bank to just tell us a little bit more. But something that's important to note is that Crystal Rivers was built when the dollar was at about 112 shillings for the dollar in exchange rate. Today it's about 150, meaning if anybody puts up something similar to this magnificent project, you'd have to get that same apartment for about 8.5 million. So make that buy. Call this number right away. Find out a little bit more as we get into our commercial break. Ladies and gentlemen, it's been absolutely amazing. We're going to hear from a financial advisor at Stanbic to tell us a little bit more. Going to take a short commercial break. When we're back, more with Stanbic on Crystal Rivers, the future of fine living. Welcome back, folks. Now we're here with Crystal Rivers, the future of fine living. Now we're looking at the most frequently asked question, which is 25 years is a bit too long. You know, is this justifiable? Is this actually a good investment to get a good return on investment. That's what we're going to be looking at with this particular feature. So we've got the expert to just tell us a little bit about that. So if you have rental income that's coming in at 45,000 and the mortgage is 50,000, is it expensive? Is it not? That's what we're going to find out with this particular episode, and have a word with the banker to just tell us a little bit about that. In the 4 years we've done this show, I believe Crystal Rivers is undoubtedly one of the very best affordable homes project in Kenya. Safely could say that, because what they're giving out in terms of value is just superb. Now, don't take my word for it. Let's also hear from the representative at Stanbic Bank. Let's go have a word with her. Thank you for coming on to the show.
I'm happy. I'm very happy to be here.
Glad
Peter.
to have you. Briefly introduce yourself.
Briefly, my name is Milka Wachira. I work at Stanbic Bank, and I'm in charge of diaspora banking and the home loans. Yes.
Now, could you explain? We've got a very beautiful project over here, Crystal Rivers.
Yes.
What is the role Stanbic is playing in the success of this project?
Crystal Rivers is actually one of the developers we have partnered with. The bank has partnered with various developers, a good number of developers. And our role in this project is to ensure that we make it very easy for this developer to offload these units. And as we are also lending to our customers, basically, that's what we are doing. Okay. Crystal.
Brilliant, brilliant.
Yes.
Now, there's some documentation that is needed. Tell us about the KYCs to owning this magnificent property. How does one deal with that?
A lot of Kenyans are shy off from taking mortgages because they think it's very complicated. We at Stanbic Bank have made it very seamless for customers. Even before I go to the documentation, we usually ask two main things. Who is this customer who's applying for this loan? If it's an individual, who is this individual? What is the age of this person? If it's a company, how is this company registered? Is it a limited company? Is it a business? Is it a partnership? Those are the details we look for. The other thing we look at is, can you afford this property? So you're salaried, or you have rental income, or you have business income. Those are the details that we look at. We look at your pay slips.
Yes.
We look at your audited books of accounts. And finally, we look at the property that you're buying. Where is this property? What is the price? Does it have a title? Those are basically, in a nutshell, those are the KYC documents that we look at. Yes.
Interesting. Now, some are saying that 19 years is too long. You know, the way they're looking at it, okay, 50,000 every month. Yes. I'll pay this for 19 years. Speaking to that, tell us a little bit about that.
I want to say 19 is even a short time. The longest we can go for mortgage is currently 25 years.
Fixed rate?
Fixed rate.
So you can pay 50,000 every month for this unit?
You can pay 50,000 every month for this unit for the next 25 years. But remember, this same client is paying 50,000 on a rental property as we speak. They do not count the number of years they're paying that rent. So when you take a longer period for a loan, you're able to have the repayments are minimized in terms of you're able to afford the repayments within the period that you've been given. And those repayments sometimes will even match with the rent that you're paying. So it is advisable, yes, you take a loan for the longest period, but in case you get into a windfall, you get a bonus or you get a good deal that, some money that you are not expecting, we usually encourage customers to, make lump sum payments or early repayments. And for Stanbic Bank, we do not charge you for doing that.
Interesting. Yeah. Interesting. What's the partnership with KMRC? Tell us a little bit about that. Is Stanbic with KMRC? Tell us about that.
Yes, Stanbic Bank has partnered with KMRC, the Kenya Mortgage Refinance Company, to offer affordable mortgages to Kenyans who want to invest in the property market.
Okay.
The solution that we have currently is that you get a fixed rate, a single-digit rate of 9.5% for a maximum period of 25 years.
Okay.
That way, a client is assured that the repayment will not change for the term of the loan. And that gives, it gives a Kenyan a lot of comfort, knowing that the rates, what is happening in the market right now is that there's so much uncertainty in terms of the economy, and rates have been going up. But when you take the affordable housing rates, you're assured of paying this loan for the term of the loan. at the same repayment. So that is what we offer right now. Yes.
So year 1, 50,000, 10, 19, 50,000 all through.
Yes.
Brilliant.
Yes.
Now, about due diligence, why shouldn't one worry about that with this particular project?
In terms of, one of the main aspects of when you take a mortgage with a bank is that due diligence is part of the process. We usually have professionals in the panel, both valuers and lawyers, who, when you identify a property like Crystal Rivers, we have a valuer in our panel. We give you the list of the valuers, you choose the valuers, you engage them, negotiate, but they do the valuation just to tell you what are you buying? Where is this property? Where is it located? What issues could be around Crystal Rivers? So that way a client has a bit of comfort, has some comfort that what they're buying is as it is. Yeah. And we also have lawyers in our panel. We have a whole list of lawyers. And these lawyers, again, are the ones who transfer this property to your name. That way, at least I know the client has a bit of comfort. Yeah.
Brilliant. So peace of mind.
Peace of mind.
Super. Now, any advice to any first-time homeowner who's looking to take a mortgage for the first time? Do you want to demystify anything?
The advice I would give, especially young people who intend to take a mortgage, the first-time homeowner, I would advise the first-time homeowners, number one, to start early. They need to start immediately you get your first paycheck, or immediately you start your business and you've settled. Start saving early towards home ownership. The other thing is that you need to start small. You might not be able to buy your dream house on day one after you start working. You can start by buying something, maybe a one-bedroom unit, then you progress into a bigger property. But in terms of what can they do now, I think it would be good for them to jump on this solution that we have, the affordable housing solution, because it has quite a number of benefits in terms of the fixed rate that we're offering of 9.5%. We also have a longer term for this loan, up to 25 years. We also have, we finance you 105% towards buying the property, which 100% of that goes to the property price. The 5% goes to the closing costs, which are the stamp duty. We have the legal fees, the valuation fees. So basically, as a bank, we are not only looking at the purchase price, we are also going ahead to finance you to pay some of the closing costs. So I think it's a good solution that any young person or any first-time homeowner needs to take up.
Interesting.
Yes.
Now, what about the diaspora Kenyans who are watching the show right now? Any advice to them? Is it the same onboarding process? Tell us about that.
Wow. At Stanbic Bank, we have a whole segment that deals with Kenyans in the diaspora. And I'm happy you've asked that question because we have made it very simple, whether you're in the country or you're out of the country. When you're a diaspora client, it's usually harder for you to access banks, but for Stanbic Bank, it's very easy for you to access. The onboarding process, the application process for a mortgage is seamless. It's the same as that of a local customer. Even the documentation we ask is the same. The only thing that would be different is maybe the resident status, whether this is a dual citizen or are they resident in the country where they're operating. In addition, the same solution for affordable housing applies to them. We can finance them up to 95% from a fixed rate, within the fixed rate of 9.5%.
Well, thank you very much. That was quite insightful. Thank you very much for coming.
It was a pleasure. Thank you very much.
Super. There you have it. There you have it from Milka. Ladies and gentlemen, that's the financial literacy on getting a mortgage. Stay tuned. Super. That was absolutely delightful. You've heard it from the bank. They've told you how this return on investment just makes a lot of sense. In about 1 year, you're already making your monthly deductibles with just the rental income that's coming in. It's just superb. Ladies and gentlemen, call that number. Call and book yourself a unit because they're going by the day. This is Property Focus. I can't be too loud with this space at the moment. People are working, but call that number and we'll be with you. My name is Peter Ngigi. Keep it Property Focus. Till next week, same place, same time. Goodbye.